Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value and entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. The Saretsky report for June 2020 is now available. There's going to be a link in the description below. Basically, again, analyzing the entire Vancouver real estate market for free. My objective information, I try to keep it as balanced as possible so people can make an informed decision. I really try to keep that report very analytical and try to sort of decipher a lot of the noisy data points, particularly right now, again, in the midst of a global pandemic, recession, a lot of moving pieces. I have to laugh again, people coming out and making these obnoxious housing forecasts as if you can really model, this kind of environment. We haven't been here, at least anyone's recent history. So I think Royal Page was out with another bonehead forecast this past week. So I just saw another article, I believe it was in the Vancouver Sun, cheerleading that the market in Vancouver was for the most part resilient and that all clear and prices basically never go down. And I think it's just so entirely premature to sit here and say, 4 months into this, that all clear, no downside from here, don't worry about the economics. And again, I'm certainly not going to tell anyone how to, that we can time the market or that I have an idea, a crystal ball of where the prices are going to be in 12 months. But to suggest that it's all clear and there's very little risk in the environment, and just because in 4 months not a whole lot has changed, again, I think is ludicrous. To understand the magnitude of the situation, again, we've kind of basically put a lot of the pain on pause, as I've talked about in these videos. Some recent data, this is one that's coming out from David Rosenberg, who I think is probably one of the most respected economists out there, that the Canadian federal government pumped in $65 billion of basically transfers, compensation, to not only businesses but households. $65 billion in a $45 billion economic hole. So they've actually almost overcompensated for the gaping hole that has been lost in the Canadian economy. So if you want to have a rough idea of why, for the most part, people still feel fairly good, or that the housing market has been resilient or more resilient than people would have initially imagined, say no more. I mean, a $65 billion subsidy, mortgage deferrals, 15% of mortgages in deferral. I think that kind of speaks for itself. You kind of put that economic pain on hold, but I think as Rosenberg made a good comment is you can't delay this forever. I mean, the Bank of Canada doesn't have, yes, it might technically have an unlimited balance sheet, but it's not the world's reserve currency. You cannot print to infinity and not have some sort of currency crisis. So we're starting to see the federal government now is getting more and more pressure to end CERB. There's also, I think there was a report going around suggesting that they're going to attempt to end it in September and get people on employment EI insurance. So I think that you're going to start to see that. The mortgage deferral is going to be another interesting thing, and those will start to expire into Q4. Now, will they do another extension? Certainly possible. I know that Australia, for example, is going to do an additional. They did 6-month mortgage deferrals. Apparently, they've come out publicly and stated that they will give people an additional 4 months. So will Canada do that? The Canadian banks, the oligopoly that we have here, I certainly think that that's a very realistic plausibility. But to suggest that you can kind of delay the pain forever, certainly some better job numbers coming out this past week with some people being rehired, but you still have an unemployment rate at over 12%, which is more than double where it was pre-crisis. So that's really kind of my thought process on that. I think that the federal government, for the most part, has done a very good job in terms of mitigating, again, the damage, but you have to understand, this is probably one of the best books that I've read. I read it a few years ago. It's called Between Debt and the Devil. If you want to understand the financial system, how money is created, how the banking system works, and the role that private debt plays in the economy and in economic crises, highly encourage you to read this. or go back and watch my interview with Professor Steve Keen, which I did about a month ago. But in essence, is that almost every single crisis has been brought on by too much private debt. And Canada has some of the most egregious numbers in terms of private debt. Basically what happened was the Canadian government basically ran a budget surplus for a number of years, and what that does is it almost forces the borrowing onto the private sector, which would be households and businesses, and puts that burden on them. The problem is, as a household, is you don't have a bond market. You don't have the ability to roll over debt through that and just issue. You don't have a money printer as a household. So, you can only accumulate the debt so high before it basically, comes crashing down on you. Whereas the federal government can continue to issue, bonds, and the central bank can kind of come in times of crisis and help funnel that. Obviously, we're talking a lot about MMT now. But that they have the ability to kind of roll over existing debt, whereas private, businesses and households, for example, don't have that same luxury. And so that's what happens is basically when you get an expansion of private debt, it's when you get into these crises. And so basically to get out of this, because we're so levered in the private sector in Canada, that the public sector now, the government sector, basically has to come in and do all the borrowing, essentially, to get us out of this crisis. And so I think that they're doing that. But again, you have to ask yourself, well, what does that look like given the number of, how much the Bank of Canada can expand their balance sheet. Obviously, we saw a recent credit downgrade from the S&P. But I think that, again, we're going to kind of start to see, to draw any kind of conclusions. As I said before in many of these videos, in my reports, which are all publicly available to go back, the summer is going to be smooth sailing. It's as we get into that fourth quarter where a lot of these government subsidy programs start to roll off. What will that look like? What kind of programs will they bring in? Etc. is going to really determine sort of the outlook here moving forward. But again, you have to say 15% of mortgage deferrals. I mean, Canada's alternative lenders, Home Cap and Equitable Group, 30% of their subprime, don't call it subprime, but they call it non-prime, book is in deferral, 30%. Then again, now we can kind of tap on the private lending mixed space mortgage investment corporations. Obviously, we don't have statistic on those, but those are even more subprime than like a Home Cap or Equitable Group. So we certainly, again, know that rubber is going to hit the road, so to speak, as we get into the end of the year, into 2021. And again, what the economy will look like and what government policies will look like is impossible to sit here and forecast, and hence why I think that these forecasts are absolutely moronic. But I think that David Rosenberg, I will let him kind of sum up the rest of this video. I think that his recent comments here on Bloomberg are worth listening to, so check that out.
David, your former employer, Bank of America, putting out a report today saying that Canada is a very good contender out of the G7 nations for handling the COVID-19 response the best in terms of how the virus has been contained, the numbers continuing to trend down, as well as the state of the current economy. Given some of the things that you're talking about, the fact that there will see some structural issues, are there any policy measures that you think are not being explored that should be explored in order to make that structural number as low as possible?
Well, look, I would counter that. I don't agree with that conclusion one bit. I mean, Canada went into this in much worse shape than almost any other country in the world. I know that people in Canada like to slap themselves on the back because the federal government debt ratio was barely more than 30%. But when you add in the federal government, the provinces, consumers, and businesses, Canada has one of the highest debt-to-GDP ratios in the world going into this thing. And there was no productivity growth. Really, the story in Canada I called it the 3 C's. It was condos, crude, and cannabis. But I would say that when you take a look at the Canadian economy going into this crisis, real per capita GDP growth was basically stagnant. So we didn't even go into this thing in very good shape from an economic standpoint. And I would say that Canada, yes, absolutely has handled the virus very well. The numbers have improved dramatically. It was really encouraging to see how Ontario and Quebec, which had lagged behind most of the rest of the country, accounting for 2/3 of the job gains in June, and that probably will continue. So the way that the virus was handled was, I think, very good at this stage. A lot of that is at the provincial level, and that's worked. But when you're talking about a situation in Canada where the federal government paid out $20 billion of income transfer over and beyond what was really needed from the income loss from the unemployment, just tells you, the extent to which fiscal resources were expended over and beyond really what was needed. But, what I'll say is that, remember that as far as I can see, the only major industrialized country that's been downgraded by a rating agency so far has been Canada. So the federal government has blown a gigantic hole in fiscal policy, over $1 trillion of debt, a third of that being tacked on just this year. And I think that the problem in Canada is going to be that this deficit becomes structural in nature as opposed to just cyclical. So I think, yes, you can skate through as we did on the income side, but you can't pay people to stay out of work indefinitely.
I'm going to leave it there for this week. Always good to end on David Rosenberg, who I think is one of the best at analyzing the data. So hope that video brought you some value or entertainment. If it did, hit the thumbs up, subscribe. See you next week.